This, looming large in the minds of everyone, cracks in the consumer. Retail sales in May growing at a slower pace than expected. High interest rates and inflation weighing on the consumer. And here with more reaction, we've got Chris Graja, who is the Argus Research Director of Economic Research and Senior Retail Analyst. Chris, great to have you here with us. So you see a print like this come out, wondering what goes through your mind, especially as the consumer perhaps showing some signs of slowing compared to the expectation coming into this report. For the Fed, at least, that would signal, all right, maybe there is a trend that will start to be locked in that warrants a cut.
So the number was a little bit slower than we expected on a year-over-year basis. I mean, the dominant theme over the last year is that inflation is weighing on people's budgets. They're spending more of their money on food and staples and basics. And where that's affected the retailers and the retail stocks is they've had less money to spend on discretionary items, which tend to be at places like Target and even Walmart. That's where some of the higher margin comes from. So that's weighed on earnings a little bit. And when I look at today's retail sales report, I mean, I don't see much of a deviation from that. So the total number was plus 2.3 year over year. Ex motor vehicles was 2.5. But then when you look at some of the bigger ticket discretionary things, you do see, as you alluded to, the fact that, inflation, interest rates are a little bit high, credit card rates are high, so that, furniture and home furnishing stores were down 6.8. Building materials and garden supplies, I mean, we like Home Depot and Lowe's on the long run, but they were down 4.3 year over year. A little pressure in sporting goods, but then general merchandise stores were plus 2.7. And one of the trends you're also seeing is that everyone wants to save money. The biggest cohort of market share gains at Walmart has been people who make over $100,000 a year. So, even people who are, make a pretty nice income are looking for ways to stretch their paycheck.
Does that signal to you a resilient or a battle-weary or battle-tested consumer, as we've heard the conference board chief economist Dana Peterson tell us in the past?
I mean, I think they're hanging in, and I think there are a couple nuances to consider. Number one is that people tend to take care of their partners, their kids, even their pets before they take care of themselves. The other thing is that, they've often employed consumers generally respond, to the people they care about and to major appointments. The spring's kind of quiet, and I think what we'll see, maybe surprisingly for a lot of people, is that once we get through July 4th weekend, the big seasonal department will clear out at Walmart and Target, and they'll start moving back to school things in. One of the things we've seen is that when Walmart has rolled back prices, they rolled back prices on an Easter basket, and consumers responded. I think back to school will be the big test. It's an appointment. It's an area where spending on your kids' education is about the best reason to open your pocketbook. And I think both Walmart and Target will be lowering prices, which should hopefully be eye-opening to a lot of consumers. So, right now with unemployment still low, around 4%, I'm, remain pretty optimistic that the consumer will come around. But I mean, the numbers are the numbers in the discretionary categories, and people are indeed feeling, higher interest rates, higher credit card rates when they have to make bigger ticket discretionary purchases.